Hi guys, hope you guys are good. So in today's video, what we'll be doing is a weekly outlook. We'll look at the DXY and then move on to GBPUSD. So me personally, I primarily trade GBPUSD, and of course, seeing that we're also going to be looking at the dollar for you guys who trade pairs that are associated with the dollar, you can also use this information, right? And it's not to say that my analysis is always going to be, you know, 80 to 90% accurate all the time. Um, it's just to give you guys an idea. Of course, the analyzing part of it is completely different from the trading part of it because certain confirmations allow you to realize something else. So you can automatically change your bias whenever, all right, based on how the market reacts. So, for instance, last week's worth of trading, the video that I did, I was completely wrong with that video, right? And I was anticipating a move lower as to reach into sell stops, but you can see that we completely continued higher, right? And automatically, just like that, the bias switches, right? And you should always be reactive and know where potentially the market is going if your other idea doesn't work, right? So, with that being said, let's start with the DXY. So you can see at the moment, that's our extreme high over there, monthly high. We did a massive retracement on the monthly time frame into this monthly fair value gap. We took these weekly sell stops over here, and at these points, we anticipate order pairing to occur, and that's when we start to see the market push higher, right, as to reach into these monthly buy stops. But just looking at the daily time frame structure alone, we can see that the daily time frame, that was the last break of structure over there. The moment price took out this low over here, that gave us a market structure shift on the daily time frame, implying that the daily time frame could potentially start switching bearish, right? And this is where it confirmed it. Around about here is where the daily time frame was completely bearish, right? Right after that, we see the order pairing anticipate to move higher. Once it hits these monthly buy stops, that's where you could potentially say that your daily time frame is now bullish, right? But I follow the draws of liquidity, so automatically, the structure just by just following where price is drawing to, you start to see structure shifts before it even occurs, right? So after the monthly buy stops, we start to see a massive retracement on the daily time frame, and we can see that it retraced all the way down into deep discount prices, where it took out all of these minor lows over here, which are used as liquidity for smart money to enter the market and order pay against those, right? We see that it also reached into this weekly fair value gap, discount fair value gap, rebalance that, and then we start to see a market structure shift over here, giving us an idea that the internal structure of the daily time frame may start switching bullish, right? And we can see that was the case. So we reach into this point over here. I think there's also a monthly fair value gap here, but we take these weekly buy stops, hence the reaction lower. And this also pushed us into discount prices, right? Where smart money would then initiate new buying, right, against these sell stops, right, in a discount price to continue the market higher. So already we know, just based on this alone, from that high over there to this low over here, anything below this equilibrium point, that's discount. So they pushed it down into discount prices to continue the market higher as to reach into premium prices, right? And we see that continuously the market continues higher, buy stops are taken, uses sell stops, right? So essentially, this was just a turtle soup condition, right? Where I was wrong. I anticipated continuous selling, right, to reach these points over here, but this is just a turtle soup. I got caught out as well, and the market continued higher. We reach into buy stop. So the main objective for the market to reach into is that daily order block over there, right? Seeing that there's a bit of a liquidity void over there, right? So that's the main draw. So we may see the market accumulate a bit on the smaller time frames and then draw into that. And then potentially you may see a push back into reaching into a fair value gap, or a move going all the way down as to reach this mitigation block and then a continuation higher. So seeing that we know that we are bullish, of course, these points over here are very important, these relatively equal highs. Eventually, you'd want to see the market reach into that, right? Because that's the draw on liquidity. There's a massive amount of liquidity resting at these points, right? And a more long term perspective would be the price having to reach into these relatively equal highs. First, the order block would be our point of reference, because right after the order block, you see this massive move lower, liquidity void over there. So massive inefficiency that the market would want to reach into, right? But eventually, there's a likelihood of reaching into that monthly high, because that was the higher high on the monthly time frame, intermediate term high, which then led to this intermediate term low over here, right? So although this is now a long term low, hence that's why you see the market moving away from this point over here. Now we just see these points over here, the highs being weak areas that we'd want to reach into, right? But of course, the market isn't just uh, going to reach into that. It may do so progressively, right? First, reach into this order block, get a minor retracement into a fair value gap, or reach into the mitigation block and then continue higher, right? So we anticipate such things. And those things for me are very important because I'm a day trader. So those 50, 60 pip moves are, essential to me. So potentially I could see a minor retracement off of this point, right? But with that being said, of course, the ultimate draw on liquidity is these highs over here, right? And then once after that, like I said, we'd want to reach into this fair value gap over there. But with that being said, let's get uh, into GBPUSD. So on GBPUSD daily time frame, we can see that we had the daily time frame, right? For a long time, it was bullish, right? As the monthly was retracing into this monthly fair value gap over here. And the last intermediate term high on the daily time frame is, of course, that point. No, 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 my bad. This point over here. So that was our last break of structure, right? But for me, I'd use this point over here, right? Because there isn't much of a, oh no, there is, my bad. Yeah, this would be my last point, my last strong high, my intermediate term high. That would be my intermediate term low. So the moment price broke this point over here, this is when my daily time frame switched bearish, right? And that's the market structure shift, implying that the daily time frame has the likelihood of switching bearish. So it's yet to confirm it, right? So the moment that happened, and it made sense why the daily time frame would start to switch bearish over here, because we reached into a very important point, being that monthly fair value gap, which got filled. We see the market pushing all the way down into this order block over here, right? Once it reaches into this order block, let me just mark that so you guys can see what I'm talking about. Once we reach into that, we filled the liquidity void, we start to see a market structure shift, right? Implying that the internal structure of GBPUSD is now starting to switch bullish, right? So we can see as well there's a weekly rejection block over this point, right? So we're rejecting that low over there, and we start switching bullish on the internal structure, right? Meaning your 4 hour, you know, all of those time frames lower than the daily time frame switch bullish. And from a discount price, we see the market move all the way down, all the way up into a premium price. There is a weekly order block over here, and this is the middle point of that order block, right? But we'll get into that. So we reach into premium prices, we accumulate a bit, we make these relatively equal lows over here, engineer lows, right? So there's a strong support over here. The market continues higher as to reach into buy stops again, right? Now, I mentioned that there's a weekly order block over here. This is the middle point of that order block, right? The mean threshold. You can see that the price didn't trade above that point, it rejected it, which implies that that weekly order block is fairly strong, right? Because we're rejecting the middle point. So then we start to see the market um, continue, to the downside. And another thing we can look at as well is if we're going to be looking at this point over here and that point over here, just using SMT divergence, right? We can see that on GBPUSD we made a higher high. However, on the DXY, price did not go all the way down there to make a lower low. In fact, it just made a higher low, right? So this information is already giving us an idea that this is a non-symmetrical market. So in a non-symmetrical market condition, it implies that you should anticipate a reversal, right? So with that information, it makes sense that, why we then start to see the market continue lower, all right? And as we're continuing lower, this point over here is where I was wrong, right? Once I saw that market structure shift, I was anticipating a move higher as to reach into these buy stops. But of course, this also caught me out. This is just a turtle soup condition where the market just seeks uh, nearby buy stops above a high and then it continues lower. All right. So we see the draw. We see a monthly fair value gap get taken. I mean, a daily fair value gap get balanced off there. Then we see expansion lower. We reach all the way down into these sell stops over here, right? So with that, we could potentially now start to see, right? This is a reclaimed order block over here, which is an institutional um, reference point or institutional resistance point, basically. We could potentially see the market draw into that and continue lower as to reach into the sell stops, right? Um, if there is a likelihood that the market now starts to just uses these sell stops and continues higher, it may be there, but me at the moment, I am seeing price want to, continue a bit lower as to reach into these sell stops. And like I said, if we're looking at the whole move of the daily time, the daily time frame, we can see that potentially this may now be a long-term high, and we may start to see the price wanting to draw into points such as these. Right, we see these relatively equal lows. So this extreme point over here has a lot of liquidity that we'd be looking into, right? That we'd want to see the market draw into. So provided that that is now our long-term high, in which there is a likelihood of you know it being a long-term high and that we've set it, and the structure already, we can see the internal structure is now bearish, right? So we'd want to see the market just push into premium PD arrays for us to continue the market lower. And the ultimate draw would then be, like I said, these sell stops over here. And this point over here, we have these relatively equal lows over there. So that would be a nice draw on liquidity, provided that we continue lower, right? But do use this information, look into it, and investigate further on your own, right? Because, like I said, it's just an idea, and the market tends to give you different ideas as well as the week progresses, right? So it may confirm this idea, or you know we start to see a move to the other direction as well. But yeah, so at the moment we are in discount prices of this whole leg. And another thing as well, cool thing you could look into, if you're seeing that the market has likely is likely wanting to draw to this point over here, you could look at grading swings, right? Which would give you, let me just delete these things so it's a bit clearer. So you could look into grading swings, right? So if you know that that's on the higher time frame perspective, that's where your draw on liquidity is, what you want to do is mark your long-term high towards that point, right? And then you grade the swings. Basically, this would be your 25%, that's your 50%, that's your 75%, that's your 100%. So you grade it in that manner. And what you'll start to see in the market is the market will respect those points. All right. So notice how we pushed lower, right, into this support region. We come back and we retest this grading swing over here. So what you want to look at specifically is then look at the the premium PDRAs, such as fair value gaps, order blocks that are aligned to this point. So don't just sell off of that point. Look at an order block, perhaps. In this instance, you'd look at the fair value gap, and this would be high probability for you to look for selling, right? All the way lower, all the way down, right? So another point over here, we do have this, like I said, reclaimed order block. So potential you know, support region over there. So you'd anticipate new selling off of a point like this, right? And if it does sell off, and then you start to see the market retrace into a point like this 50% of the whole move, and you see that there's an order block put perhaps over there, or the market gives you a sweep of buy stops right at this region, right? Approximately at this region, that's high probability for you to continue selling, right? So you could use these grading swings, right? Provided it would work, provided, of course, the market is going to draw to that point over there, right? But let's be reactive and less predictive, right? But with that being said, I think that's it for today. And if you do have any questions and whatnot, just leave them in the comment section and I will uh, respond to those. But with that being said, happy trading, right? Kind regards, the architect.